Hello, and welcome to Markets in Focus. My name is Joe Bell, and today I'm going to walk you through some of the most interesting financial market themes that I'm observing. So the labor market in focus because of the end of the Fed cycle seemingly near. Take a look at U.S. wage growth from a recent survey continues to slow. Nvidia, big news over the past week, boosted big lift in revenue guidance, mostly related to an AI push, a lot of demand for semiconductor chips. And finally, US small caps. I think this has been the underlying theme in the story so far for 2023 that is not getting as much attention. US small caps could not be performing more poorly given the performance of the S&P 500. All right, so take a look at this Richmond Fed Service Average Wages Index. All right, for the month over month, down just north of 31%, actually the exact same, down 31.3% from 1 year ago. Wages are starting to come down. If you remember, we started to see the jobless unemployment claims come up in recent months, and there's starting to be some cracks in the labor market. Remember, the Fed's anticipating a 1% increase in the unemployment rate tied to the record rate hike cycle experienced over the past 14 months. Not unexpected, but everybody's looking for signs of when this slowdown will happen. Here's some more evidence. It may be around the corner. Nvidia, chip maker, joining the tech giants of the 21st century. If you take a look at this on Thursday's shares, Nvidia north of 25% early trading based off of their most recent revenue guidance, well above Wall Street expectations. A lot of it driven by the overall demand for artificial intelligence in that area within the market. The company is now valued at nearly $1 trillion, a level very rare territory. In fact, it gained around $200 billion in one day. That was higher than Apple's previous record. So really good day for Nvidia. The company and obviously Nvidia shareholders, and really pushed tech-heavy indexes along the way. Now, one of the industries that is not benefiting from this is the tech-light Russell 2000 index, the small cap index. If you look at the difference between large caps and small cap performance during this year, it is pretty stark. So since the beginning of February, especially significant difference. U.S. small cap stocks, as represented by the Russell 2000, have drastically underperformed U.S. large cap stocks as represented by the S&P 500. You can see the S&P 500 from the beginning of February through May 24th, S&P 500 up 1.5%, rate slightly positive, a little bit of a choppy price action during the past couple of months. Russell 2000 down more than 8% during this time. Typically, you like to see small caps heavy in those cyclical sectors outperform during the initial recoveries after bear markets. So this is somewhat unique compared to history. Now, why are we seeing this? Well, look at the differential and sector allocation between the Russell 2000 small cap index and the tech heavy S&P 500, more of a large cap tilt. You can see the Russell 2000 has nearly 15% less information technology and 6% communications. Those are those big growth tech companies that we just talked about. Large cap growth has been leading. Why is that the case? Well, the market is expected the Fed is going to reverse course with multiple rate cuts during the second half of 2023. Therefore, you're seeing money flood into those large cap growth names. To the extent this doesn't happen, remember the Fed is still not expecting rate cuts this year. We could see some of this reverse course, but right now the bet is all in on these tech-heavy names. That means large caps outperforming, mid caps and small caps completely sitting on the sidelines. I don't think that's necessarily a good thing. We like to see broad market breadth and participation for those overall trends. And before we wrap it up, a good story. A professor from Florida, engineer, right, has broken the world record for the longest time spent living underwater without depressurization. That's a word you don't want to say 5 times fast, right? Well, why is he doing this? Well, he's so far spent 85. The target is 100 days. The previous world record was 73 days. So he's been under there. It's only about 30 feet down underneath a lagoon there in Florida, doing some testing around how the body responds during these lengthy periods. They say there could be some translation, if you will, in relationship to how the body responds in environments like Mars and other planets. So there might be some takeaways that could be used. But if nothing else, this project cost about $100,000. He gets his name in the world records for now until we start to see someone else go for that 101 day. He's probably going to hit that 100-day marker here in a couple of weeks. So congratulations to you if you make it, but so far new world record. So with that, I want to thank everyone for watching, and we'll see you next time.